they don't have much primary markets to invest into. They're like, you know what? What should we do? So what happens is an A16Z goes towards, let's say, Eigenlayer, and they tell these guys, like, you know what? We want to invest in you guys. We're going to put in 100 million because we have that optionality to put in 100 million at 2 billion valuation. And think about this. What's the other option for them to put in 100 million somewhere? Nada. There is nothing else than going to a liquid market strategy where you would buy like 10, 20 different tokens and invest in those. That could be an option, but they don't do that. They just go to primary because I think they're thinking about we can secure the deal and get like 3x multiples on that. That makes it a lot easier. So what happens on that basis is the next thing. Retail looks at it. They're like, you know what? These guys already invested at 2 billion. So once it come out, they probably do like 3x, 4x, 5x. And then we would need to invest at 10 billion valuation. Whereas if you look at a meme coin, which is maybe 10 million FDV or 50 million, they're like, you know what? That multiple there, that's ours. We could take that. So let's take it back, invest in that. I could make 10x, 20x, 100x on that meme coin rather than putting in on 10 billion and maybe making 1x or lose the whole money.
Welcome to another episode of No Cap. This time with us we have Nick and Omar, founders of Secondlane. I would like to welcome you to the show. And yeah, first things first, it would be awesome if you could bring out some cool facts about yourself, your background, and what's exciting for you right now in the market.
Oh, yeah, kick it off, Omar.
Sure. I've been in the space since 2016. One of the first assets that I bought was XRP, just to give you a heads up. So now you know what kind of tranche I was and where I am at this moment. LP in some large funds as well. And at some point, we decided to just build Secondlane and do it properly. Originally from Afghanistan, fled the country during the war, ended up in Holland, Netherlands, and been here since 1998, roughly. So almost 25 years.
Do you think your background and your upbringing had any role to play in you inevitably coming into crypto? Would love to hear about this a bit.
Oh, yeah, definitely. Yeah, and if you go a bit more, I mean, on our side of the, let's say, the world, it's not easy to come by. It's very difficult, so you need to grind a lot to get things. It doesn't come easy, literally. And education is very scarce as well. So you do whatever you can to achieve the goals that you want to achieve. And that's actually, I would say, a lot of the result of whatever I had back in the days that I'm here at this point. So yeah, definitely, for sure.
Yeah, I'm Turkish Cypriot Azerbaijani. Mm-hmm. So for me, like my upbringing, directionally somewhat closer to yourself than most people that are listening to this podcast, had a large role to play too. You know, like Cyprus isn't recognized by any country in the world. And so the crypto thesis comes very clearly and very quickly.
It does. It does.
Yeah, and on my side, it's great to be here. I've been in the space since late 2012. Originally found Bitcoin through a friend who was launching an esports betting platform back at the time. And Bitcoin was just the asset that made the most sense for him to launch that. Made my first money in Dogecoin. At the time, I was working in the oil fields as a project scheduler. So the first time I made money online, I was like, wow, you can make money online. I'm never going back. And I worked remotely and for myself ever since until we started linking up with all my other co-founders here about 5 years ago. And we've just been navigating the OTC markets and the primary markets since that.
Awesome. And where are you originally from?
I'm originally from Romania. So also in Europe, I got adopted. I've lived in Canada throughout my childhood, and then now I'm down in the United States.
This is like one of the things I love about crypto. So genuinely is, almost every other industry that's in tech is so America dominated, right? It's like 99% of all the talent lives in the same, 100-mile square radius. And that's the polar opposite of crypto. Like even this call today, everyone here is ethnically not American, and that's just extremely bullish.
It is, but we're all in the same trenches, though.
I think there's a common goal, Tiago. That's the thing. There is a common goal that you understand that certain failures have happened in the past. That if you go back to certain governments, for instance, on my side. There's a government failure at some point which it doesn't work. And then you see the dilution and everything. Whatever you buy on a daily basis, it's basically just getting crushed and crushed and crushed. So you look into other different means, how you can actually sustain that amount of funds and recreate something for yourself in order to dilute yourself less over the course of 10 years. I mean, if I were back in the days, like my parents' age in Europe, I would have had a period of real estate by now, if I were. But at this moment, you can't even just buy a proper house if you want to live in a proper place. So that's the huge difference.
I don't think the technology would have ever picked up if it didn't have that decentralized user base and developer base. Otherwise, there's too much scrutiny and too much of a threat to build this alternative financial system alongside and at times leveraging the traditional system, right? I think you saw the side effects of that through Operation Choke Point and here in the United States. You know, Canada has had its times where it's gotten pretty heavy with the scrutiny, the debanking. I personally been debanked by every major Canadian bank there is just for touching crypto in nominal amounts. So the risks are real. And this distributed model was kind of what enabled this grassroots movement to grow up to the point that now you kind of have more of a top-down adoption. And it's really top down from capital flows at this point. And it's probably likely for the next year or so that profile remains true as the majority of inflows come from private wealth, you know, in the US through the ETF products, the ETPs you see listed around the world, etc. I think this is going to be the primary driver of growth in specific assets, right? As we enter this like new paradigm of real institutionalization, which arguably began back in 2015, perhaps a little bit earlier when the Winklevosses and Barry Silbert were first pushing for the ETFs and engaging the SEC, right? Institutionalization comes with tailwinds, as you've seen from the regulatory stuff that we had to fight at the same time. But how do you grow a new asset? You need liquidity. You need velocity of money. And in order to do that, until you have like a fully robust infrastructure that's standing up on its own, there's been these bridges back to the traditional system. And I think now we're trying to build even stronger bridges, right? As the two worlds become more composable and accepted. And I think that's kind of where we are at the moment.
Yeah, I totally agree. But I do have one question. So basically, like, Nick, from the get-go, the first asset you bought, incredible winner, still winning at the moment. If you had held it probably at the time, the multiples on that would be insane. But Omar, don't get me wrong, I love XRP in a certain way. It's a love-hate relationship. But definitely your opinion has changed.
I sold it literally, I would say, when it touched just below $3, Tiago, because I'm a bit of autistic guy as well there. So I did the math and I was like, I bought it at 20 cents and sold it, I think, at 250 or 260 or something like that. So I was like, I'm okay, move on.
Yeah. But like, how would you look back into the first thoughts you had about crypto, you know, on the moment you pressed the green button on XRP and right now, like, what do you think are like the biggest things that impacted your perception around the crypto market?
I think at that point when I bought it, I didn't do any research, like zero. Not a couple of friends of me reached out. They was like, you should buy XRP. I said, what is XRP? And then I dived into it, read about it a bit, like, okay, sure, let's buy it because these guys told me to buy it, and I know them for a while, so they won't give me shit. And then I bought it, and then later when I sold it, I did more research on XRP and any other assets. So I think that has been the most appealing thing on crypto, that there's so many things developing constantly on a literally daily, monthly basis that it's keep going on and on and on. It's almost not even possible to, let's say, keep it up. It isn't even humanly possible to keep it up.
I was going to say, to your point, you know, ape first, research later. In times of high volatility seems to be the motto of a lot of folks. And to your second point, yeah, I mean, it's pretty much impossible to follow all this stuff just because you have so many branches at this point over time. I do think there'll be some type of like consolidation. I think the market has heavily fractured itself, and you kind of see that. You can't have like 20,000 Solana tokens launching every day and expect the small retail liquidity base to be able to support all of that stuff. So yeah, I think we'll see some type of consolidation at some point.
Yeah, I actually do think that what you just said here at the end, Nick, is a little bit of a good segue into the major topic that we want to discuss here on the podcast, which is low float, high FDV. And actually, a good question. Do you think that, in Solana, you have all these punt fun meme coins appearing, all these small, you can call it small fish, not the big whales. You have some cabals trying to punt these coins, some small fish getting dumped on by these cabals. But this dynamic, of course, like you're saying, for every 1 gazillion meme coins that appears, there's one that's a winner. And there's definitely not enough liquidity to support the majority of them. What do you think is, for example, the comparison to the overall, more educated market, the market that we all participate more on a daily basis, which is projects that have venture capital coming in, actually try to have a product, and they're not just meme coins, actually be useful. But at the same time, there's also a lot of the discussion, which is there's not enough demand, there's not enough retail to actually support at least the price and the market cap at which these projects are launching. What do you think about that?
But there are two things there, Tiago. The first thing is there's a huge demand or supply. There's a huge demand on the venture side, like billions in assets of venture capital just sitting on the sidelines to invest in all these primary markets. And the supply is getting less and less and less. Tushar mentioned it on another podcast as well from Memecoin. He mentioned there's they don't have much primary markets to invest into. They're like, what should we do? So what happens is an A16Z goes towards, let's say, Eigenlayer, and they tell these guys, we want to invest in you guys. We're going to put in 100 million because we have that optionality to put in 100 million at 2 billion valuation. And think about this. What's the other option for them to put in 100 million somewhere? Nada. There is nothing else than going to a liquid market strategy where you would buy 10, 20 different tokens and invest in those. That could be an option, but they don't do that. They just go to primary because I think they're thinking about we can secure the deal and get 3x multiples on that. That makes it a lot easier. So what happens on that basis is the next thing. Retail looks at it. They're like, these guys already invested at 2 billion. So once it come out, they probably do 3x, 4x, 5x. And then we would need to invest at 10 billion valuation. Whereas if you look at a meme coin, which is maybe 10 million FDV or 50 million, they're like, that multiple there, that's ours. We could take that. So let's take it back, invest in that. I could make 10x, 20x, 100x on that meme coin rather than putting in on 10 billion and maybe making 1x or lose the whole money as well. That's the other optionality, which could definitely happen. So that's their movement. So that's why most recently I said funds and everybody, investors and foundations, should actually stop raising funds above 1 billion valuation. That should be the mark, the best tops. Because the key component there is all the primary markets at some point, they hit this threshold in which they need an amount of treasury to build down the line another 2-3 years. And if you compare it to the heavy hitters out there, the L2s out there who have 100 million, 200 million in treasury, you need to have a bit of a war chest in order to be compared to them. So that's why I understand it from the founder's perspective as well, that they need to raise the mark to a higher level. But I would say don't go too far. Don't just go and build that war chest. Build an ecosystem fund. Let retail build that ecosystem. Set up a bonding curve and let them invest indirectly into your fund, into your growth strategy, instead of going to all these VCs. That would be the smarter choice. And to VCs, I would say, do the other way around. Then go to the liquid market and buy a position there or multiple positions there, because that's the space as well, which they should be attending. It's not only primary market and make 3 to 5x and move on to the next best thing. That won't work. That's my thought.
Yeah, I wonder how many of these VCs that had invested in a, let's say a large overinflated multi-billion-dollar round had the conviction to actually go in and buy the asset liquid when it was below the valuation. And, there were a lot of those cases over the past few months. There is one interesting thing that you mentioned, which is like, the retail buyer is like, there's all this overhang. I'm going to get screwed. Instead of putting all of my energy towards this, why did I go for meme coin? But the difference is I started to see the rise of meme coins that are also that's also locked, right? Like, which have backed from a couple of different investors. So I guess I'm curious to hear a bit about like the land of a Memecoin OTC, right? Whenever you see, and for anyone listening in, whenever you see that the market cap and FDV of a coin are separate, that means there's like insiders that own a portion of this, token supply, which is locked, and they get unlocked, and basically they sell on you. Curious, and this is also a problem of meme coins, right? People will be shocked if you go to like the largest meme coins of this cycle. A lot of those meme coins, at least on the Solana ecosystem, WIF is an exception, have insiders. They're getting daily unlocks, and the unlocks are large. So I'm curious to hear, like, how do you guys see the space of like Memecoin OTC?
Well, first, I think people are always going to need some type of financial incentive to do actions, right? So if you kind of think of like a DAO structure, even, right, you're going to have your core contributors, right? Perhaps they're getting paid a salary or they're getting these token unlocks. The point is that in order for them to do meaningful long work, they need that incentive, right? As you move out from there, you kind of have your distributed agents who are more bounty and transactional based. They're kind of mercenaries. To answer your original point around why they do this, they could do OTC sales just to kind of raise liquidity to support the project. For example, if they're not necessarily all VC backed, they're going to have to support themselves. And OTC treasury sales through a secondary sale is kind of the means to do that. The advantages there is that you're able to kind of control who's getting access, right? You may not necessarily want a full retail exposure or specific investors in, and then this just gives you the ability to manage that flow.
Now with people who you trust, definitely. That's the point.
Yeah, especially at an early stage. Otherwise, if you're just giving tokens to absolutely everybody, you're just creating a lot of unnecessary sell pressure. And I think projects are the most vulnerable when they're first starting. They don't necessarily have the brand recognition, the liquidity in the market, etc. So they want to control that as much as possible. And a lot of people feel that by having both hands on it, they're going to be able to have a better outcome. Sometimes that works, sometimes it doesn't. Obviously, you see a lot of these projects launching where the founders just start dumping, right? These unvested tokens, etc. This is kind of goes back to the regulators. What do they want? They want disclosures, right? And this is kind of an example of that disclosure and why that is valuable to people, so people can make an informed decision. And here at Secondlane, we pride ourselves in having access to pretty high quality data, talking to a lot of the issuers themselves. So we can get, full insights on, who the cap table is, the unlocks and all this supply. And we provide all that information for free to everybody so they can make the most informed decision. And the goal being that we want to increase transparency in all these market segments, and, forcing the disclosures from the issuers is the most effective way to create that. And it also just improves the space in general. Right.
But to our point, we are trying to do OTC on the Memecoin as well. But maybe on the last couple of months, there are parties who reached out to us like, would you do the Trump coin, MAGA OTC, or would you potentially do WIF OTC, or maybe other liquid meme coins OTC? So there are definitely people who are looking for other options to de-risk on, instead of just going to the market and putting the red button and move on to the next one. So, which shouldn't be the case. That's one of the things that we definitely need to adjust. Just go and push the red button and go on. Because you're hurting not only the project, but so many other people are underlying who might provide liquidity and so on and so on. So definitely do a bit more research instead of just doing that.
On the other hand, you're also providing very good entries for other participants in the market who are willing to buy at that price.
Yeah. True.
Yeah. But, okay, so taking a very concrete example, last cycle, Shiba Inu had on their landing page, we have 50% of the supply burned because we sent it to Vitalik. Turns out the supply was not actually burned. Do you think that Vitalik should have went, for example, to Secondlane and sold it OTC instead of pressing the red button in front of everyone else?
So you bring up a good point. Why OTC, right? I think one of the biggest whys is that you can dampen volatility, right? Whether that be from investor unlocks, whether that be from large treasury, these treasury sales to manage operations that I'm talking about. Going back to the burn, I mean, even that wouldn't be a burn, right? Like the supply is still circulating. It's still getting transferred to somebody. If you really want to burn it, send it to a Genesis address, right?
Yeah.
You kind of saw that with like the Rumilios NFTs, for example. People were sending all these NFTs to the Satoshi Burn address, and they've kind of been doing a lot of like, gamification around this stuff. But yeah, people have misconceptions around definitions. It is really the core thing here. They don't understand what it actually means to burn something. And sending stuff to Vitalik or Satoshi, it's a marketing stunt, right? It creates publicity. Ideally, whoever you're sending that to, you want them to talk about it, to give exposure because they have a large audience. And we live in the attention economy. So as an issuer, you want to capture that attention, preferably to you, right? And that drives underlying liquidity, perhaps developer interest, ecosystem interest. The point is that discoverability is what creates a successful project, right? You could create a cure for cancer, but if nobody knows about it and has no distribution, the cure is relatively useless for the majority of the world. It doesn't benefit anybody, right? And it's the same concept here, but perhaps less profound.
Yes, I agree. But that's a good analogy, yeah. With regards to price discoverability in these private markets, how do you feel that, well, in both cases, when it's both up and down, how does the market move once, for example, a project that was raised at a very low valuation, suddenly a buyer appears that wants to buy at a premium? How quickly does this buyer get outbid, or how quickly do prices adjust? And the same thing on the way down. How quickly does once a seller appears at a discount, how quickly do people rush to dump? And basically, how would you say, do you think that we're already at an equilibrium in terms of discoverability in private markets, or there's still more efficiency to come?
I think there's always more efficiency to be extracted from something, especially when it's operated by humans, right? There's more bias can be involved there, for example. It's less algorithmic. There's less of a system behind it. It's more sentiment-based. And I think that's what really drives the secondary market and private markets in general, is sentiment around an asset. I think a typical situation you see is a very large cult of personality built up around some of these projects, right? What's the hottest flavor? What's the hottest narrative? Those are really what drives demand or a premium on an asset. And, I guess the last good example would be Monad or Eigenlayer, right? These things initially launched in the hundreds of millions, but they quickly ran up to the billions as, parallel EVMs or whatever the narrative is, right? They come and go. Like the weather. But the point is that cycle happens all the time, right, for these assets. And the premiums are just simply, is there more demand than there is supply? That constriction on the supply, if you only have one small allocation, that's what's going to drive a massive premium to this stuff. And there's a couple of ways to prosecute that, right? You're going to get the best execution when you execute kind of like an auction style for price discovery around this stuff, right? And then in the other direction, on the downside, liquidity always comes at a premium, right? And every instance when you're listing in a secondary is going to be unique, right? Perhaps you have an LP in your fund that's looking for liquidity yesterday. Well, in order to incentivize that on a liquid asset, you're going to have to offer an attractive discount for a secondary investor to come in there and purchase that stuff. But yeah, I would highlight that the majority of this stuff is really just sentiment based on the upside, and on the downside, again, it's really based on need, right? You don't necessarily want to sell quality assets. Ideally, we'll start to see kind of a lending market, lending and borrow market start to develop in the private markets. Until then, you only have one choice, which is pressing the red button.
I think there are a couple of things there as well. Most of these guys just look into who was on the cap table, why did they invest there? So if you have the tier 1, tier 2 funds, that was like, oh, I missed out, so I need to buy potentially on the secondary market just to have a bit of an exposure. So that's the first thing. Second thing is most of these secondary need to be allowed by the foundations in order to go forward, because we have seen the 3AC, FTX, SOFs, or whatever, all those are basically locked for X amount of years by now. And they can't even liquidate those positions because nobody's allowing them to liquidate those positions. So that's the other thing. There's a consent form there. And then once you have figured that position, then you can move into the next phase, which is price discovery. Like, okay, can we potentially buy this asset? If so, what would be the potential premium or the discount if it's already trading on the market? And the turnarounds are days to a couple of weeks sometimes. And it's sometimes better to just go pre-TG, for instance, because the demand is higher pre-TG. There's more speculative value there. Like it could trade at potential this X, or once it's trading, it has been always the case that there is a discount mechanism there, like 40, 50, 60, maybe even a bit higher, depending on the vesting time that it has. And usually, if you could reassign it, it makes a lot easier for a lot of parties as well, just to go ahead with that. That saves everybody a lot of time, just to be honest there. Yeah.
That's a great point worth highlighting in all of this stuff, is that when investors are placing their investments in these instruments in the primary market, which for your listeners, a primary market is like a direct sale from the issuer. So for example, if you're raising a seed round, a series A round, and you're offering it directly to investors from the issuer, that is a primary round. A secondary round or market is a trading amongst investors once something has already been issued from the issuer. So that's the difference between those two.
Yeah. And the third thing I would say is probably, how do you reach out to the employees themselves as well? Because some of these employees have even a longer vesting than the investors themselves. And each and every one of them, they also have their needs on a regular basis, right? They have their family, they have their housing, and etc. Sure, they're getting a bit of in return that they can do with it, but they also need liquidity movement at some point. So imagine if something is already trading for 1 to 2 years or whatever, that you might need also to think about, okay, how we could potentially help the employees at some point. We have done tender offers for some of the projects out there as well, in which we just bundled up employee and then sold it to one investor, which works because those employees are at the end happy. They have this satisfaction moment in which they're like, you know what, now I can just relax, do my work properly. So the efficiency of the work would be much higher than for them to just wait till they get a liquidity moment, which is probably 1 to 2 years. If you go back to BYDX, for instance, it was 3 years for them. They were just literally waiting 3 years to get a liquidity moment, which is horrible, definitely, because it should have been happened much earlier for them as well.
If at all. Like most projects don't have, in the traditional world, don't have tokens. They have shares. And those shares have long dated vesting schedules on them. And a lot of the time, the demand, most startups fail. That's the truth of it, right? So crypto, I feel, with these early token unlocks kind of puts the reward, right, kind of ahead of the work, and perhaps that skews incentives, etc., right? Are the teams and employees still motivated if they're all rich, right? I think there's like that great statistics of how many multimillionaires NVIDIA has minted and stuff, right? Well, how do they feel to come into their 9 to 5 and stuff, right? A lot of those guys, to their credit, they're passionate about what they do. So regardless of how the bank account looks like, you're motivated and enthused by your work. So you're going to show up, right? But a lot of this stuff, like going to the employee tender offer, this is something that doesn't typically happen a lot in crypto, because I think a lot of the founders and issuers aren't familiar with it. I think a lot of the founders are younger, or they come from backgrounds that aren't necessarily like financial backgrounds, or perhaps maybe they don't have like the seniority of a CFO in place who can navigate this stuff. But the easiest comparison would be like SpaceX. They do an employee tender offer every single year. And in every employee tender offer they've done, they've had a markup, meaning that the valuation has increased. So this is a way for investors to see their their book value on paper increasing, and it also acts as a retention mechanism. I would love to join a company where I know that my shares, once they're vested, can get liquidity without that company having to go to a liquidity event, an IPO, which that market has been frozen for a while, and we'll see if that opens up again soon, right? Or some type of merger and acquisition, which it's also seasonal, right? Depending kind of on liquidity constraints, where interest rates at, et cetera, et cetera. And right now, I mean, the M&A market has been kind of slow, though in crypto, I do expect that to be picking up. The reason being, again, the institutionalization, though those guys are here to own the infrastructure, right? So if you see a lot of some of these earlier exchanges, some of these earlier protocols that are foundational to like perhaps an app layer or a consumer layer that could be built on top of it, they're going to want to own that stuff, right? So yeah, we probably see an M&A season coming up here in the next year or so as well, in terms of a window for these broader liquidity events at the equity level. Otherwise, your only optionality are these tokens.
I think there is a taboo on it in terms of optics that employees can't sell their shares. They need to hold them indefinitely. So I'd say probably that's the worst thing that you can do, because you need a team which is happy to work on the project that they're working on, because only then they can excel and get better products out there.
Yeah, cool. I actually do have one question. I mean, you spend a lot of time working with these founders and these teams, and you always need to get their consent for the sales to happen. Do you think there is any situation where they should not consent, or should they always consent? And how much of your time does it take to explain to people that in most situations they actually should consent?
Well, the thing that go ahead.
Education is the biggest driver here, right? And I think it's what lacks the most. So that's half our job, is kind of educating them on the pros and the cons. I'll start with the cons. I guess when you see restrictions, it's typically when there's a fundraising round going on. If you're a founder, for example, and you have a secondary market trading that's perhaps, trading at a discount to what you're raising at, if I'm an investor, why am I going to invest in your primary round when I can go to the secondary market and get it at a discount, right? So typically issuers are going to block off secondaries to maintain a static price for that round. That way there's only one avenue to get exposure, right? I kind of think of it as kind of like a gating mechanism. Do you have a green light or red light to do this stuff, right? And typically you'll have the red light during a fundraising round. Otherwise, we see a lot more flexibility on approving this stuff outside of that fundraising condition.
And added thing there is what we do tell everybody on even my own personal portcos. I tell them, if you move into a round and it has been like 5x or 10x multiple from the previous round, reach out to your investors and ask them if they would potentially de-risk a portion of that holding that they already have. Don't raise $1 million, raise 1.2, for instance, and have that 200K reserves for potential new old investors who might need to do the swap and de-risking moment. So that's one of the things that I have mentioned to all my portcos, like, go ahead, see if they want to liquidate. Why not? And then you can have fresh blood in the space, and they're happy, because once they move into TGE, they might just sell that position because they have already de-risked a portion. They're like, you know what? It's okay. I'm going to hold the rest and let it fly. So the other thing is what I usually sell, because it's not only founders to whom we talk, it's also lawyers, because those are the guys who actually make the decisions on that level, because they need to know what kind of documents do we need to create in order to give this consent. I think one of the larger L2s, we had like 5 or 6 conversations with internal, external lawyers, and then the foundation. And at the end, they gave the consent, like, okay, we will do this. But we tell them, put parameters there. Like, don't go lower to their most recent round, for instance. It needs to be either that or above that. That's the first thing. Second thing, potentially, don't let them sell the whole position, for instance. Let them sell like 10, 20% or 30% tops. That's a de-risking. It's not that you're actually, because the thing that you would get is they would just hop on from one to another. You don't want to have that kind of investor on your cap table. You want someone who is for the long term. De-risking is a normal thing, but doesn't need to be over-exaggerated. Like, I'll de-risk the whole position if I want to. That doesn't work. So those are the things that we mentioned during the call as well.
And I think it's important to kind of have this velocity. I mean, if you're familiar with the concept of the velocity of money, right? In the circular economy, it's extremely important for economic growth, right? And in crypto, it's the exact same thing. The velocity of assets, the velocity of money. If you have a situation where there are no, VCs getting paid, and VC is a business, right? I think people really forget about this stuff. You only have so much liquidity flowing around in the market, right? You see kind of some of these fundraising metrics from VCs. Well, they deploy a fund. Well, they have to go raise another fund, right? From outside LPs, and that money, that's how like the money actually gets into this ecosystem, right? LP, VC deployment, they realize profits, they reinvest. If you have a very long dated, time to TGE, time to liquidity, all of that money is just stuck there, right? They're not going to be able to raise another fund until they return money to investors and prove that they are good fund managers, good stewards of that capital. So if you have an ecosystem that's heavily restricting those releases, right, and those distributions, it's actually a net minus to the entire industry because you're restricting the growth of new investments into the ecosystem, right? And I think about it from the founder perspective. Why am I taking on an investor in the first place? I have a set goal, a phase that I want to reach to, right? And I need that capital to achieve that. If I hit those milestones, in my mind, the investor has served their original purpose, right? They filled their mandate to me. I'm happy to, release them in that sense. The other side of it is that you want to keep alignment with your investors. So kind of to what Omar is saying, you don't have to do full unlocks, right? You can just sell portions of the investments as well. And I think that's the beauty of digital assets, is that you can fractionalize a lot of this stuff. It's all just digital for the majority of it.
I have a question. What does the average makeup look like for an OTC buyer?
Yeah, I mean, our client profile, again, is kind of working with early stage, late stage venture funds. There you have another segment called kind of secondary funds as well, which just invest into secondary markets. They don't do primary markets or anything, right? That's just a unique strategy. It's probably the fastest growing market segment, actually 20% year on year from the traditional markets. And now you're starting to see it mature here in crypto as well. The other side of that would be more discretionary capital, meaning family offices. Family offices are the lifeblood for, from an LP base to a VC. And then further down the line, you kind of have your individual, sovereign individual, high net worth, ultra high net worth. You may even have a situation where a project is successful, they have liquidity on the books, and they're just investing themselves off their own balance sheet, for example, right? OTC desks, market makers do this. Pretty much anybody who is successful in this space ends up being some type of VC or asset allocator, right? Like, it's the top of the funnel. It's the most discretionary and control, and you can influence a direction and trends as well when you're able to allocate capital towards something.
And sometimes there are existing VCs as well, existing investors from the captive.
Yeah,
see the progress of the project, and they're like, you know what, we will double down. So whomever is out there, who is selling.
And even at a, zooming out even further, like again, with institutionalization, it brings even larger profiles like sovereign wealth funds, right? You're starting to see Bitcoin specifically become a political issue, right? It's obviously the most liquid asset. I'm not saying you're going to have a sovereign wealth fund investing in a seed round for this stuff, but they're active in this space because like anybody else, they have an excess of capital that they're looking to deploy. And there's a very few quality assets to deploy that into. And perhaps, usually these sovereign wealth funds or, government entities in general, they have different mandates outside the investors. They're not necessarily all profit orientated. They may have like some underlying goal or technology or ecosystem that they're trying to develop. And so they're giving it capital to grow it, right? And that kind of goes back to my original point of like, why are people investing? They're trying to create economic growth in some direction that fits their thesis.
So in some ways, it's the liquid fund ultimately, right? In one way, shape, or form.
Yeah.
That are cropping these things up.
Yeah, I think liquid funds are going to have a renaissance. I know Multicoin, Kyle's made some comments around this. I think you're going to see, Van Eck, I think their alpha fund was probably like the highest returning liquid fund.
Yeah.
With the, going back to your early point, there's large overhangs of supply that are hitting the market here, right? I mean, again, we have about 350 million in tokens that are going to be coming out this week. There's 10 billion plus that are going to be unlocking into 2025. So if you look at the liquidity in a lot of the, whether it be Solana or you go further down, into the top 200, liquidity drops off quick, right? So what are the effects of $100 million per day hitting the market? Well, it's down only in that case, right? So it creates buying opportunities. right? And I think you talked about that before. Who has the conviction to double down in the spot markets when something is live and diving? I think the best instance of this, right, the bullish unlock narrative would be Solana, right? Sam saying, sell it all to me $3 and F off. That marked the bottom for this stuff, right? Because it's a broadcasted event, right? People are aware of the vesting schedules. They know how much supply is going to be hitting the market, and they know when that supply is going to be hitting the market. Solana had large unlocks, kind of in that FTX era, that they were able to absorb that supply, right? And they knew there's not going to be any large supply influx until 2025. So you have a huge window of relative calm, right? And it's the same thing with Bitcoin, right? You have these large supply overhangs from the German government, other government seizures, etc. Now GOX all getting distributed. People are scared at the time, but what they don't realize is that there's such a strong demand, and this asset is so limited, right? In terms of its issuance and availability, everybody wants it. It's actually an opportunity to purchase a large amount without having a large influx in price, right? And that's very rare that assets have that. You have to be very high quality to be able to support that liquidity coming in.
I'd love to hear your guys' opinions on how the FTX tranche sales went. I thought that was really interesting because, you were seeing people try and do some sort of like discount analysis on the price of Solana that day.
Yeah.
And what ended up happening is like Solana was fluctuating like 10, 15% during that week, or the many weeks that this was going on. So, yeah, we'd just love to hear how you guys saw that come down and if you have any unique insights.
Yeah, we, with Secondlane Capital, which is another arm of Secondlane, we were participating in that. We raised a couple of vehicles around that. The way they handled it originally was, as everybody knows, at this point, there was that fixed price down there at $64, $65, and there was an unlimited amount, right? It took time for the market to become aware that this stuff was happening, and there was a timer to get it done, right? So that's one of our advantages at Secondlane, is that we have the access. We have the visibility and the know of when this stuff is happening. So we're able to act quickly, right? And then they kind of learned from there, right? If their goal is to get best execution price, you probably want to do a closed bid, right? Let the participants drive the price rather than, a set arbitrary price at perhaps a less favorable rate to the creditors. And from there, you kind of saw that jump, right? The final clearing price was above $100 in the final sales and stuff. And at that point, everybody knew about it, right? So the participation was a little bit larger. Did that influence the volatility in the spot markets? Yeah, you could argue it, sure. But in general, I think these markets are always going to be volatile. When you have a period of like contracted liquidity, that's naturally going to increase the volatility in this stuff as well. You kind of typically see that through the summers, right? Everybody's on vacation, the VCs aren't here, they're not picking up the phone, etc. The market makers are put paused on the algos, whatever. Generally, liquidity tends to slump, right? And you kind of just create these range-bound markets at that point, right? And that typically happens every single year.
Do you have any feedback to the German government on how they saw their BTC?
Yes, I do. So I think there's actually some like narratives that were put out there, and it's fun to talk about and laugh about. But in reality, there's set processes, right? Like it's no different from the U.S. Marshals. When we were looking at some of the early auctions, we participated in that process. So we're very familiar with how this stuff goes down. It's just mandated, right? It's no different than U.S. Marshals working with Coinbase to do closed auctions. I go back to the point of like, there's few opportunities for investors to purchase quality assets in bulk. And these events are one of those. Tim Draper, how did he acquire his Bitcoin? The majority of it. It was through these auctions, right? With the earlier stuff through the Marshals. And if you look into German law, it's the exact same thing here. This seizure was from, supposedly bad sources, right? The proceeds of crime, or however they defined it. But the point is that they're not just selling because, hey, let's just get some liquidity. They're selling because they have to at the end of the day, right? Their goal is to liquidate as quickly and orderly as possible, but the goal is just to get the task done. Did they make a bad decision? Well, price is back up $10,000 since they sold. So arguably, yes, right? And perhaps in the future, we see more states kind of doing this game theory that you've seen from the US kind of kick off of Bitcoin reserves, right? I think this is like the final boss of crypto, right? It also creates potential risks. Does crypto just become, or Bitcoin specifically, just become another financial asset? It's kind of like a trophy wife you put on the table and it sits there and nothing changes. There's a few people out there kind of talking about this narrative as well. The early ethos of crypto and Bitcoin perhaps has been forgotten in that sense, or few remember it, or few care, right? Everybody just wants the number to go up and get fabulously wealthy off this stuff. But do the original principles of being a sovereign individual, not anti-government, but anti-establishment, wanting something better and something different that's less manipulated and controlled, do people still care about those values, right? That it's all a question that's going on now, but I think we'll see more of these liquidations, come and go. There's always probably going to be more seizures at some point, right? Like crime doesn't sleep. And we'll have the same process again. But it's just important to remember that they're not just arbitrarily selling this stuff because like, hey, screw crypto, we're going to try and crash it. No, it's usually mandated.
But I think the other thing is, they should have gotten better education from the parties with whom they work, to be honest. Those guys could have actually told them, you know what, you have a large size, spread it out, use like 2-3 months to get this done instead of just pushing it out within weeks, literally, or maybe 2 weeks tops. That's what I saw at least. That is the smart move. Right now I think this was yesterday when U.S. government has already moved like 2 billion BTC to a new address. So then you're like, what's going to happen? Are they also starting to sell? So it comes back to us as well. Not only Secondlane, but every infrastructure project out there who can potentially pull such a deal off, to talk to these guys and see and educate them what the better course of action would be, instead of just sell, get my own fees and move on.
There's a couple interesting things here that I wanted to touch on. Firstly, it's fascinating how much Bitcoin as an asset has changed over the past 10 years, right? Back in the day, you were talking to those like famous like closed auctions, which were happening in like the early 2010s. Yeah, people were willing to pay a premium for BTC OTC, right? Because buying that much OTC of this quality asset would literally move the market up.
Yep.
And that's just not an issue anymore. So that's like the first thing that I thought of. Second was, you mentioned the Bitcoin strategic reserve, which I can't believe we didn't plan on talking about this, right? Because it's like the craziest news that came out in the past few days. What's interesting though, like even let's say Bitcoin, there is a reserve. I saw a tweet from a friend of mine, Amir at Hypershare, and he was highlighting that, even if Trump pulls it off, we probably won't be seeing this kind of like BTC reserve come into effect until after the Trump presidency. And you saw that with Nixon as well, when, he kickstarted the conversation around the SPR in 73, and the reserve didn't actually take a barrel of oil until 77, which was like, multiple years down the road after the EPCA was signed. So, yeah, we have, but at the same time, like that would be crazy. That means in the span of maybe like 15 years or so, you go from Bitcoin being this highly liquid asset, which people are paying a premium to buy OTC, to potentially being in the reserve of the US, which is just like unbelievable. And I guess the last thing I wanted to ask you guys about, right from this, you guys had so many interesting things that you said, is do you think retail should be able to buy OTC more? Because it's all sophisticated investors, and it's, the Solana deal that we were just talking about, you had to, like, it was not everyone knew about that when it was happening. Towards the tail end, yes. And, you can make an argument that the vast majority of the people who, didn't know wouldn't even be able to participate anyways, which is, like, unfortunately true. But do you guys think that, like, non-accredited investors, like that kind of landscape, do you think that they would benefit almost from the ability to participate in these markets? Or you guys think it's just too, like, risky?
I think there's risk in anything that you do. You can cross the street, you're taking a risk, right? Like automobiles have a much higher probability than, killing you than anything else in your everyday life. So risk is inherent to life, right? It's just a fact. In terms of participation, this has been a constant debate for years, right? Are people just being restricted unfairly? Or is there actual protections, happening in here? Obviously, everybody says do your own research. I think, what crypto is really great at is democratizing access to financial services and opportunities that have been typically high on the shelf and out of reach for most. A notable project, that is trying to move the needle in terms of accessibility in private markets and opportunities is like Echo, with kind of what Jordan and Kobe are doing over there, right? I think you see more of that over time. I think if we see a shift in the regulators and who's in control here, perhaps there's some new rules, right? Even just despite those rules around accredited investors, what they can and can't do, and how you meet those thresholds, I think what could really move the needle would be the change in the underlying definitions on the assets and how they're classified, right? There's restrictions on the ability to participate in securities specifically. But if you have a situation where perhaps some of these assets aren't securities, right, at some point in their life cycle, that allows, legally the participation from that wider base. And I think that at early stages in a project, we talked about you want to control who's coming onto the cap table. That capital has a purpose. A lot of the time, it may just be funding operations, or you may be bringing an investor for the social signaling or a network. Does retail Joe, who's working at the bakery, have that same value to the project when at the earliest, most vulnerable time of a project is the starting of it, right? You want people on board and aligned with you that, can push the needle forward. Of course, people will view it as unfair. Everybody should have access. But at the end of the day, you need to be thinking about the longevity and goals that your project has. And perhaps later down the road, we can talk about the definition of decentralization. Retail is a great way to distribute that, whether it be through CoinList or any of these other like large launch pads. You create that distribution for the ownership of the network, right? And that happens, I think, at a certain point. But do you want that to happen right out of the gate? It creates a lot more unknowns, more volatility. And I think, that could be dangerous for projects early on. But in general,
there's one thing, Nick, which I want to add there as well. It depends on the type of project Namik as well. I mean, back in the days, if you go back to H&T, how that model has grown and where it is now, how all these other deepen are actually, not going to say copying it, but picking up the rough things out there, adjusting it a bit, and then recreating something new in terms of economics, which helps the decentralization of that project, and down the line, it does create something very sustainable. Second point on becoming a reserve BTC, I think it's the first time in maybe hundreds of years in which everybody on Earth has the optionality to buy an asset and hold it and store it for themselves. Because you couldn't just go somewhere and get a chunk of gold and delve it or whatever, buy it. So the accessibility has changed quite humongously. And that's the key component there, that everybody's like, I can buy it and store it. Maybe down the line, it will be $1 million or whatever, or not. That's the good thing. And that's, I would say, the shift of the total economics around the world. The gold is very centralized to that asset as well. I mean, everybody holds a gold storage, Fort Knox, US, Swiss, whatever. I don't own any gold because it's so difficult to obtain. It's so much headache. And where do you store it? You need to buy all these cashes at the bank and etc. And if the bank goes down, you only get like 100K back. That's it. You're done. So you would lose basically whatever you hold of that thing. So that's the other crazy movement there, which is good, definitely.
Yeah, actually, Omar, I've been looking at the books that you have behind you for a while now. And I saw one there which I think is called NFT Metaverse. Have you read it?
Yeah, I did.
Yeah? Do you think you could write a better one, or?
Probably so by this point. I think the whole movement on a metaverse, everything, it was probably too quick, just to be honest, on my opinion, personal. And it needs more infrastructure layer before we can be on the next phase. That's what I think in general. And we need more products, definitely. I mean, we have already so many chains. Let's build products on those. That's the next phase, which I want to.
You didn't enjoy the Yoga Labs surfing through the gutter game? You don't
No,
think it was a major unlock?
No, it wasn't. For me, not. For me, it was okay. But yeah, I think there are more options there. And if we want to get in on a broader public to attend to crypto, we need more versatile DApps there whom actually taps into different types of personalities.
Yeah. I do think that the NFTs in the metaverse do show how well, even without these products that you're talking about, the power of community, the power of assembling an online community, how it moves the market.
Yeah, it does. I think it's a factor of how you identify yourself with these things. Like
the name.
That's the thing. I bought Pudgies back in the days. I bought a couple of others as well. I was like, you know what? I can identify myself to those because there's this community behind it. It's very interesting. So it attends to my identification as a person. So
as a penguin.
That's the thing. As a penguin. Yeah, I feel like a penguin. So, and that goes to each and every party. I mean, Nick's probably, I don't know, maybe Bored Ape Nick. That could be your personality or something else. But so I didn't.
Is that a roast? I'm not sure.
But I think it goes to the fact that each and every person is different, and you need to build a set of different tools to attend to everybody instead of just building like this and then focusing on those assets, and that's it.
Yeah, I agree. I actually bought too many NFTs, unfortunately, I would say. But the one that I only felt that my identity could be tied to was the Milady I hold.
Oh, yeah.
That was the only one that resonated with me. I'm not sure if that's good or bad, though.
It's a good one, I would say, because a lot of I think the space in which you are, the people who own it are very solid in the space. So that
or at least very schizophrenic, right?
Milady World Order.
Yeah. But yeah, I do actually want to ask you a question which is a little bit outside of the crypto market. But I do see, Secondlane has their OTC channel where they're constantly posting deals, things for you to buy, sellers interested in the market. And very often I see their deals that aren't crypto native. You spoke about SpaceX during the podcast, Nick, but I'm not sure if I ever saw it there, but I've definitely seen Neuralink. Some of the Musk companies are there. How do you actually find these people and these buyers and these sellers, and actually how much of your business does it represent?
Yeah, great questions. I mean, again, our core competency and mission with Secondlane is to create more discoverability and searchability around all of these assets and counterparties and issuers. Sitting here in San Francisco, it's obviously the epicenter of a lot of this like development in the AI world, etc. It's been accelerating rapidly. I've been following AI as long as I've been following crypto. And kind of had that watershed moment, 2023. How do you get access to it? It's really just knowing other fund managers and these closed networks that I had mentioned before, right? Typically, when Elon is raising capital, he has a few people that he works with. He gives them, hey, this is how much is available. Go raise me the money. What happens then? So you have the Elon, now you have the second layer of the initial allocators. They go out to their broker-dealer network and they raise the capital. Right. So it goes downstream from there. But it's very similar, primary issuer. They have a couple selected, exclusive parties that then they kind of add economics on top of it. And then they give it to broker dealers who then, they give it optionality to investors. Perhaps some of those investors are savvy and they're all leveraging the same thing here. Access, exclusivity to something that's hot, right? So people are going to spit up these SPVs, special purpose vehicles, to invest in these things. And then they attach their own economics, typically a 2 and 20, meaning a 2% annual management fee to cover the costs of fund administration, all that good stuff. And then a carry on the underlying asset itself. So it's really just about, network. at the end of the day, right? And having access to the right people and the right network. And our strategy is that we can broadcast that out to a much wider base as well. That isn't just like restricted in one country, right? Or one city. It's more global, right? And that's kind of what our core competency is. And our goal, we're going to be expanding more and more into that as well. It's really just about curating the network and building the distribution rails underneath that.
And I think if you wanted the numbers, Tiago, it was like below 5%, but right now it's going above 5%, between 5 to 10% in terms of equity and etc. And most of these VCs, they have a crossover basically. Believe me, some of these guys actually hold these other tech equity assets and they hold crypto at the same time as well, because they see that the blurred line where there was at some point, it's getting vaguer and vaguer and vaguer. So at some point, it might just cross over probably to both sides.
Bullish crypto and also bullish Secondlane. Looks like I had an expansion coming along. Congratulations.
We do our best. I do have a question for you, Namik. If you want, what's your aim for MegaETH in terms of long-term vision for the next year? Let's keep it short.
1 year is not long-term at all, in my opinion.
I know.
So I mean, that's just like the definition of crypto, I guess. In crypto, 1 year is a long-term. Yeah, I mean, I think for us, like, we're heads down deep on two things, right? One is building the chain, right? These optimizations are no joke. So making sure that we build the first real-time blockchain, quite the challenge, but one we're very excited about and one that we're enjoying a lot. Goal will be testnet in the fall and mainnet by end of year. And the second thing is actually helping foster the next generation of applications, right? I truly believe that the next generation of applications will be on MegaETH. MegaETH will be the 0 to 1 moment for crypto adoption. And that's because you no longer have latency. You no longer have janky UX. People, like retail, hates latency. I think that's like the one true takeaway of life. On MegaETH, you don't have that anymore. On MegaETH, you can build applications which are able to leverage 100K TPS, 1 millisecond latency. And that kind of block time means that the design space or composability evolves exponentially. So, yeah, I mean, like most of my time is actually focused on working with people like Tiago, who's actually one of the builders on MegaETH, on just building really, really cool shit. Mm-hmm. And I think that is, everything else is noise. I think making sure that we have 10, 15, 20 even applications which are good, that you know the names of, is phenomenal. And other than that, I don't spend too much time thinking about what the rest of the market does.
True. But if I dive a bit deeper there, is two things. First of all, how do you see the acquisition of the user base that you have? I mean, we all know liquidity is mostly on ETA. That has been always the case. It's still the case.
It's really, really difficult for layer one to attract liquidity. And you see this when you look at the TVL between Solana and Ethereum. I don't know how much TVL dictates the valuation anymore.
It doesn't.
Like, right, Polkadot and, all these other chains, which I'm a big fan of, obviously. While on Ethereum, right, MegaETH is a layer 2. That's how we're able to achieve this level of performance. We make very realistic and practical trade-offs that allows us to be the first real-time blockchain. By virtue of being a layer 2, liquidity is a lot easier to attract, right? We're fully EVM compatible. You can see this from Zirkit, which has billions of dollars locked, and they haven't even gone live yet, right? So they're another layer 2. And obviously Blast and Optimism and Arbitrum, right? There are the guarantees of Ethereum for these layer 2s. If a person has $1 on an L2, they know no matter what ends up happening with this layer 2 and, whatever, they can always exit hatchback to L1. And that means liquidity is a lot safer because it inherits this decentralization of Ethereum. So on that vertical of liquidity, I think we have ideas that we keep closer to chest, but there's a lot of virtue of being a layer 2 when it comes to being able to bootstrap liquidity. And yeah, you said there was a second question. I don't know if I missed it.
Well, no worries. I added two things. So how do you plan to make retail part of the chain? That would be the first thing because you're going into testnet, obviously, and then at some point mainnet as well. Would there be a bonding curve set up in which you would just give it to retail portions of tokens or whatever? And the second thing is, when do you think that you have succeeded in terms of MegaETH, that you were like, you know what, that's my target. If I hit that, then I would say those are the two final questions for my part.
Sure. I think for distribution of users, right, I think there's like two levels of this. One is how do you make sure this is an environment that retail can interact in, right? And then it's really a game of like the on-ramp, off-ramp flows, right? I think that's like a great example of USDT and Tron. Tron was able to get like a lot of behavior because it had a really, really strong partnership and very, very strong focus on emerging markets. I'm in crypto for this exact reason, right? Emerging markets. I grew up in emerging markets. That's what interests me infinitely more than building a casino for West Coast and East Coasters, right? So that's top of mind, and making sure that retail can participate, have a lot of fun. I think I have one directional thesis, which is the days of dollar in, dollar out are gone, right? No longer will you have people come in and be like, okay, I'm going to speculate with the hope of making more money. It's kind of what Nick was talking about. It's attention economy. And because of MegaETH Stack, right, you can now build applications where you can monetize attention. And I think that's like a direction which I want to see the applications on MegaETH, right, go towards. And like, I think that's going to hyper accelerate user adoption. When it comes to like, distribution of token, right, that's a lot harder because of accreditation laws. In a lot of ways, ICOs are awesome because it meant it was a fair playing field, right? Anyone, anywhere, it doesn't matter if you're sitting in, a penthouse in Manhattan or you're in like Turkey or Afghanistan. Like, if you have access to the internet, you can read a white paper. You're probably going to get scammed. Almost all of those are scams, but you can participate. That's not really possible anymore. I think there are solutions like Echo, which I really like. You don't let price discovery happen in private rounds, right? It's what you described. I don't think that people should, even if you can, don't raise it $1 billion valuation. Don't raise it $2 billion, $3 billion. Yes, you need the war chest. You think you need the war chest. Do you actually? Or is it just ego? So these are the ways that we're looking at, like, trying to make this as equitable as possible for retail. But honestly, it's all it's just life.
Cool. Thanks for that. Looking forward to it.
I do think that overall, I know Namik, like, we spent a lot of time together. I think, Namik, you did a wonderful job trying not to shield MegaETH too much on the podcast. Thank you.
Yeah, this is not a MegaETH podcast. It's just, I don't even wear MegaETH t-shirts. I'm wearing, like...
I think you changed it, right, at the beginning.
Yeah, I had, like, some crypto merch. I'm like, you know what? I can't wear crypto merch.
But yeah, I am looking at the shirts that you're wearing, and I'm wondering when I'm getting mine.
It's on it.
Yeah, of course.
You'll get it.
Awesome. It's a deal. But yeah, I'm not sure if anybody has some closing remarks, some things that you would like to say to the viewers before we close off.
If you're looking to learn more about secondaries, hit us up over at Secondlane. We're very accessible through social media, through Telegram, etc. Obviously, do your own research on a lot of this stuff. It's at the end of the day your decisions that matter.
And we are here to educate. That's the thing. So even for you guys as well, I mean, Namik, Tiago, just educate as much as possible so that people learn where the curves are. That helps a lot, definitely.
Yeah, awesome. Nick, Omar, pleasure to have you on, and thank you a lot for these insights.
Definitely. Thanks for your time, guys.
Peace, guys.